Hiya, Chris. How are you?
Yeah, not bad, Dale. Good to speak. 3 months later, it takes some time.
See how time flies.
Yes, it certainly does, Dale.
I mean, seems like I think once I said that to someone, and they said, "Well, Dale, I don't know if I'll be alive in 3 months." So, anyway, Chris, it's great to meet you.
Hey, Justin.
Hello.
Steve, yes? I don't know, Steve. Anyway, so why don't you tell us a little bit about your journey and what you did? I went to your Twitter stream, and I took a look at what you wrote, and the one thing that caught my eye was that you look to OTT when you're analyzing the oil market. Is that correct?
Sorry, I didn't catch the word.
OOTT.
Oh yeah. I'm a member of that crew, you could say. Yeah.
Okay.
I can see you now. Yeah. Excellent.
All right. So, what are your impressions about what happened with OPEC over the weekend?
OPEC. I have thought for 20 odd years that OPEC really hasn't had that much to do with what goes on in the with oil market pricing. The people who do are the people who actually set up and have operated the Intercontinental Exchange since 2001. Okay. I like to say that the oil market moves at tanker speed and the financial oil market moves at light speed. And the two things are not that connected. And, I go way back. I mean, you've been in the market 40 years, Dale, have you?
Yeah.
Yeah. Well, I go back to market regulation. When I first started in the mid-'80s, London Metal Exchange had just had the tin crisis, if you remember that, right?
Sure.
And that was the market meltdown. And that was when you had sovereigns who were essentially supporting the tin market price for a period of decades. And then subsequently, you remember copper and how the copper market was manipulated by Sumitomo for 10 years or so. And so the commodity market 101, I always say, is that if producers can support the price, then they will. And it's a matter of sort of what funding is available to do that. And I've always looked, I'm a senior research fellow at the Institute for Strategy, Resilience and Security. It's actually where I'm sitting right now. And I've always looked at the macro picture, Dale, the seriously macro picture, looking, well, what are the sort of, obviously it's the trade flows and it's the energy flows, and it's the real world flows. And how does that affect what goes on in the financial markets? And I went from market regulation in the early 80s. I became a director of the International Petroleum Exchange in 1990.
Which exchange again, Chris? Which one?
It was called the IPE. It's now ICE Futures Europe.
Okay, yeah.
ICE
was in New York. Wasn't it based in New York, ICE? Where it started?
ICE, I think, Dale, ICE started in New York. I mean, it happened after I left IPE. IPE, I left in 1990, end of 96. I was responsible for the legal design of the UK natural gas balancing point contract, for instance.
Wow.
Basically, when you start trading CH4 molecules for profit, you need to have some sort of, risk management of it. And I was involved in sort of helping put that contract together and, more to the point, regulate it, come up with the regulatory regime. I was responsible for overseeing the Brent futures market back then, when it really was Brent. So I was in there at the dawn of that. I managed the deliveries of Northwest Europe gas oil for 6 years. So I came to understand the sort of physical market games that people played. And in the early days, Dale, you may laugh at this, when I started at IPE, the third month had never traded, right? All the trading was going on in months 1 and 2. That was when I started. It was such an early days, and it was only the Brent field. And then gradually, over the years, we saw other fields, Forties, Oserberg, F.A.C.E and whatnot come in. And I sort of grew with the job and got involved in sort of macro markets and regulation of them, putting together agreements with the Singapore Exchange, for instance. I introduced trading tools such as EFS, Exchange of Futures for Swaps, were brought in. Trading at settlement, options trading. I was a sort of green light regulator, you see, Dale, thinking of reasons that people could do something rather than reasons they shouldn't,
Yeah.
So that's my journey anyway.
Okay. And what is your current bailiwick that you're, on public, on social media, posting on Twitter, seem to have kind of a tint towards crypto type things
Yeah.
and blockchain? Is that where you're spending your intellectual efforts now?
That's a really good question. 1998, I set up a .com, right? It was called Oil Clear. Well, it isn't called Nuclear. You see, I couldn't believe that people still confirmed trades with faxes and telexes back then. That was in 1998. So I raised £250,000 with some help to come up with basically a paper. You could say, take the paper out of that communication and come in with an online trade confirmation system. And it was called Nuclear, but oil was the first market that we did it with. And it consisted of a messaging system. So I could actually ring you up, Dale, and we could actually do a trade online and then put the details in. And then the trade went into a shared database, right? A shared market database, not a blockchain. That came later, and in my view is an aberration. But it was a shared database. And then the third element that brought it all together, which was a sort of innovation in, you could call it, legal design, was basically a market user agreement, right? So that the moment that you and I clicked on that mouse and the transaction was captured in that shared database, we were legally bound by that on a global scale, right? That was the innovation. And I had directors of several exchanges put money in. I had, some really, really interesting people put money into it because everybody could see the power of it. And everybody wanted to own it. So I should be a billionaire, right? Because but if the sell side owned it, the buy side wouldn't use it. And if the buy side owned it, the sell side wouldn't use it because what it was doing was capturing valuable market data. So I went to Platts, who had 3,000 terminals or whatever it was, and suggested that they might be interested in working with it. And they thought about it for a couple of months, and then, in my view, probably made one of the worst decisions they ever did, which was they said no, because they thought it would take them into, regulation or whatever. And at that point, basically the funding sort of, ran out because we've been working on it for 3 years. And it came to a halt, and there were other things happened I won't go into. But suffice to say that a year after we finished, the Intercontinental Exchange set up a new service called e-Confirm, right? Capturing OTC trades. And the year after that, the Chicago Merc set up a system called Trade Hub, capturing trades. So this actually makes a huge amount of money for them from, market data, because they captured off-exchange data. So that was my exposure, Dale, to, you could say, I call it financial technology now, but back then it was where law, accountancy, and online communication came together for the first time. So over the intervening period, I've sort of, I got involved here eventually. I fetched up here I was asked by the former Minister of Defence of the UK to become a senior research fellow at UCL, looking at, this is after the financial crash in 2008, when we came, 2 hours away from the cash machines being switched off, basically. And to look at, what does a resilient financial system even look like, right? And literally do some blue sky thinking and start from scratch and start from bottom up.
Do you think that we do today know what a resilient financial system looks like? or are we seeing
Um,
the cracks of what is not resilient and poorly managed? And yeah, let me ask you this, Chris: Are you in the UK?
sure.
I just guessed. Are you in the UK?
Yes, I'm sitting in London right now.
Okay, so you know, the narrative I heard last year and for years now is that U.S.
Mhm,
banks cleaned up their balance sheets,
mhm,
because of Volcker rules, etc.
mhm,
And they were in better shape because the European banks never did that. And the
mhm,
narrative I'm hearing since SVB,
mhm,
from one guy I know who's a pretty, seasoned trader, is that the
mhm.
UK banks are better than the US. And now I'm starting to hear that European banks are in better shape than the US. What do you think?
I think I think that's probably true. I think that's probably true.
Why?
But well, I think it comes down to our financial system and the fact that it's not as sort of rigid. Certainly in the UK, our financial system is not that rigid. We're not as set about by rigid rules as maybe the US is, or certainly the US is. So there's a lot more flexibility here in our system between, say, the central bank and the treasury in particular. There's a lot more flexibility here than people realize, okay? Because, we don't really have that many written rules. And so I think our flexibility is our greatest asset if we choose to use it. Europe and the ECB is a separate thing. I mean, to me, I don't see the euro as being any different from a token, quite frankly, because it's disconnected from the fiscal base, right? That's what the Europeans chose to do. A fiat currency normally is essentially based upon the productive capacity of a nation. And it's directly linked in many ways via taxation, essentially. I won't go into all of that. But Europe doesn't have that. The ECB is set up to create tokens called euros. And then below that, you've got this target two clearing system where gazillions are shuttling around and very few people actually understand what's going on there. So I think they are in a position, if they choose to create a lot of euros, then because the euros are sort of detached from reality, for as long
Then
as people believe it.
why are they going to an emergency Fed window for 60 billion
Well,
when it was put out there?
that's because they're tied in. But that's because everybody is tied in to the dollar clearing system. I mean, the biggest window, as I understand it, into the real, into the non-dollar world is via London. Okay, that's always been the case. That most of the dollar flows, as I understand it, flow via the Bank of England. It's sort of a mega node. But Dale, I don't understand enough about the relationship between the euro and the and the dollar clearing system.
Okay.
But
Well,
sorry, go on.
all right. So banks, pension funds, everyone was buying paper well over a year
Mhm,
ago, treasuries,
mhm,
whatever, at
mhm,
rates that hadn't been that low since the US Civil War. And in
mhm,
fact, it's hard for me to believe that there aren't many institutions overseas in Europe and the UK when
mhm,
there was negative interest rates. Here, the 10-year
mhm,
got down to 1.6 or 2, but you still had a
mhm,
yield. I'm trying to imagine what it would be like to have bought into the market at negative rates where you're paying
mhm,
to hold that treasury, and then have
mhm,
this interest rate spike happen in a year where you're not only taking losses on principal, but you
mhm.
have to pay to keep the trade.
Yeah, I know.
Yeah, I ever think about that?
It's no, nobody could. It's mind bending. It really
So I
it
mean,
really yeah.
you don't think there are people stuck that, I mean, they're buying Greek bonds and everything at negative
Mhm,
interest rates. They
mhm,
were negative even when they were positive to real rates, but they did go negative
mhm.
rates in Europe. So can you imagine owning bonds from, and that's only a year and a half ago?
I think
So
it's unimaginable, really, isn't it? What's actually happened? But
yeah,
I do think that the major misunderstanding, I think, on the part of the policymakers is their response to by raising interest rates, and I'll tell you why. Because this inflationary impulse came about from a massive blip impulse in energy prices. And those energy prices were driven by the futures markets, right? Because the benchmarks are futures benchmarks. Now, the point is that it's not bank credit, i.e., the monetary system, that has driven the inflation in energy prices. It is market leverage that has done that. So for the bank system to come in and for them then to start raising interest rates, which automatically increase costs for anybody who's actually got a mortgage or anybody who's actually got a loan, it's completely insane in my view as a response, because you don't address a market leverage impulse, in my view, with a bank credit response, and yet that's what they've done. So they basically put petrol on the inflation fire, in my view, Dale. They really have, because this is supply, this is cost driven. You know, the only hard cost is energy cost, in my view. You know,
okay.
and that's what it is.
Okay, so
So
this is what really your passion and what you're involved in right
hmm.
now, this website, right? Island Power. What island are we talking about?
We're talking about at the moment Pacific Islands right now. We just have literally today had a meeting. We talk about, you've heard of a grid. We talk about natural grids as distinct from national grids. And we're approaching the whole subject of sort of climate finance in a completely different way to the conventional. You know, we don't get involved in arguments about whether, you know, climate change is good, bad, indifferent, or whatever. We just
Right.
say, well, for us, the higher the carbon fuel price, the more profit there is in saving it, right? That's the way we're talking about it. We're taking a pragmatic view that investment in carbon fuel savings is going to be one of the biggest trades, if not the biggest trade of the 21st century, because people don't realize how much waste there is from well to wheel, right? It's phenomenal how much there is from well to wheel. And if you actually start at the end use, which is what the Danes did in the 70s after the oil shock, they basically said, right, we don't have any oil and gas. We're just going to minimize our use of it for any given use of it.
I love this saying right here,
Oh,
Chris. The
Yamani's
Stone
brilliant,
Age
isn't it?
didn't end for lack of stone, and the
Yeah, yeah.
oil age will end long before the world runs out of oil.
Well, you see, the
I
point
think,
there is, Dale, right, that we've reached a point at which oil is becoming unaffordable. I mean, there's bound to be one, but you know, people who are bullish at oil at 100 and 200 and $300, I'm saying, well, no, people can't afford to pay probably what we've got now. You can do if you print dollars to pay for
yeah,
oil denominated in dollars, but the rest of the world, Dale, is not in that position. And
yes,
you know, there's been some really interesting sort of strategic moves been going on in the. You know, I have some sort of what's the word, unconventional views, for instance, about things like QE and what the purpose of that was, and looking at strategy from the sort of highest level. You know, and you've heard of energy dominance, haven't you? The US
yeah, sure.
policy for energy dominance.
Sure. I
Yeah,
mean,
yeah.
you know,
But
wars are fought over it, so it's definitely not worth that. And hegemony,
yeah.
which we're trying to hang on our hat to, that China's challenging by taking trips to Saudi Arabia. What do you think about that
Yeah.
development, Chris? That the Chinese brokering a deal between two long-term rivals. I mean, we're not talking, we're talking thousands of years between
Oh, yeah,
the
yeah, yeah.
Saudis and Iranians. What do you think that's about? And what's your view on China with what you're trying to accomplish?
I think that both of them obviously are big oil suppliers, and the Chinese are a big oil user. And they basically, because the Iranians have suffered from sanctions all this time, they're not exactly in a really good bargaining position vis-a-vis China. I mean, China is the buyer of last resort now. The Russians are suffering from that. The Iranians are suffering from that. But China isn't a military threat to anybody, in my opinion, although it suits the military-industrial complex to say that it is. China is all about economic power. And I have said for about 4 years that I think that China is basically becoming the buyer of last resort. And because there is a limit to what people can pay for oil products, the Chinese who have been building refineries like they're going out of fashion, right, are going to be in a position to dump. They'll be in a position to dump products because they're buying cheaper oil from Iran, cheaper oil from Russia, of course. So I have thought for some considerable time that China is about to take, sort of pricing power and control from the producers.
So if they go from being the major buyer and they are active in all commodity markets, grains, you name it, if they turn from being a buyer of last resort to being a seller of first resort, that's really going to change. That sounds pretty deflationary to me.
Well, yeah, it will deflate up to a point, but don't forget that as things stand, this is Yamani's point, all the hard oil, all the easy oil has been exploited, right? And it's this fundamental point about, energy return on energy invested, okay? Where one barrel used to get you 35, when you pumped it. Now, like, shale, it might be less than 5. So
kind of like QE reached diminishing returns for dollars spent on QE to getting any kind of economic benefit.
It's a similar syndrome that you get the law of diminishing returns, absolutely. But you've got like an irresistible force of more and more expensive raw materials coming up against the immovable object of people being able to pay for it, right? So, and who's being squeezed behind that, or within that, is the middlemen. The middlemen are being squeezed on this. So what we're looking at is a shift to services, energy as a service. A lot of people you're seeing. So we're going to go away from oil and gas, I think, downstream to energy efficient means of providing heat, cooling, mobility, power, etc., etc. And do you know who the first exponent was of the smartest trade I ever came across? Right, I'll tell you this: James Watt, the Scottish inventor, he didn't sell his new steam pumps to the Cornish tin mines. Right, he gave them the use of it in exchange for a third of the coal they saved, right? So I call that pumping as a service, and it was essentially a swap of what was between his ears and carbon fuel savings at the retail price, because it was expensive to deliver coal to Cornwall, right? And that is exactly the model that we at Island Power are basically promoting and taking to the Pacific. We're saying, well, hang on a minute, think of the cost of delivering carbon fuel to these little remote islands in Micronesia. It's massive, it's huge. So that if we can come in and take technologies like, say, ocean cooling, which they have in Hawaii, instead of air conditioning, right? You can just take the ocean cooling and provide the cool that way.
Wow.
It's coming up with smart solutions, but not ones which are necessarily high tech. You start with the ones which work now, and then
Why do you feature wind power here on your website?
Yeah, well, wind power, we're big, wind power is basically taking dollars out of the fresh air. At the end of that's what you're doing. But you've got to come up with the right model. And instead of actually selling wind turbines, we're talking to wind turbine manufacturers about, well, you supply them and we'll give you a percentage of the production. And also, more to the point, you'll get a percentage of the savings in carbon fuel at the retail price. That's like,
so it goes back to carbon credits again.
Yes, but carbon credits denominated in energy. Energy's valuable, right?
Okay. Yeah.
We're starting at the other end of the telescope, really. and because we think that the markets have unnecessarily put middlemen in, when what we can do is directly connect the producer and the consumer, and monetize the flow that way. And you know what the tool is that enables us to do that? It's called prepayment. Prepay credit. Yeah, prepayment. Okay. Well, if you think about somebody who, prepay's been around a long time, like thousands of years. Yeah. Right. And Enron did it by the back door, of course.
Okay.
If you remember, sorry, go on.
No, so you're on social media like Twitter, and you have a website. What are you looking for, just to increase awareness on these platforms? Are you looking for people that might be interested in getting involved financially with some of your products? What's your purpose for being on social media?
Yeah, absolutely. I mean, we've sort of emerged from stealth mode quite recently, because we literally were doing a lot of stuff, behind under the radar screen. We launched what was called the Pacific Natural Grid Initiative June of last year. And then we've been literally out in the islands quite recently, finding pilots, proof of concept, bringing on board partners. My colleague Marcus, who's sitting with me, he was in Vanuatu, and we were looking at the sort of climate declarations that they come out with to make sure that the approach that we're putting forward can be implemented. So we'll be looking. What we're looking for now is, we're looking for,
money.
I'll make note that smart investment. Obviously, we've got all of the people we need to make this thing happen are there. We're talking to funders right now, and we're just interested in, well, hang on a minute, how can we actually invest in these future flows? Basically, what you're looking at, Dale, is an energy return, right?
Yeah,
it's literally like getting an energy
like the
return.
Other structured in limited partnerships, like a lot of energy deals have been in the past.
Very much so, but without some of the risks that you've got in that. You are literally getting a return in, let's call them energy credits, prepaid. If I give you a credit that you can use to pay your energy bill, would you accept it? Yeah. And the answer that most people would say is, well, yes, I actually would. It's exposure to the energy price. Now, lots of ETFs and ETPs have been doing,
especially my natural gas bill this winter in California.
Well,
I've never seen two charts move in opposite directions. Nat gas almost under $2, and the highest we've ever paid in California. Who managed that trade? What a nice spread! What a nice arbitrage that was for somebody.
But it's completely possible, if you get the structures right, to prepay. Yeah. If you could prepay for $2 now, right? Yeah. What you're doing is a prepayment. Actually, it's a bit like a fully margined futures contract, isn't it? Really, you're actually locking in your price in advance. Yes, you are prepaying it. But the beauty of a credit is that you can trade it if you don't need it. It's like a real estate investment trust where the units are returnable in payment for rent, right? It's just the credit. It's a really interesting product, but it's not new. It's been around. All right.
Tell us the truth. Tell us the truth. Which of these islands do you have your eyes on that you want to live on?
Oh, I think if I tell you, I've got to kill you, actually. But no, that's not the case. Dale, it is public. It is public. The island is called Niue, Niue. It's a little island of 2,000 people. It comes under the umbrella, it's semi-autonomous, under the umbrella of New Zealand. And it's a fascinating place. My colleague's been out there. I'm too old to go. And it's just about the right size to sort of decarbonize the island using the sort of methods that we're talking about, and you could call it financial technology, but it's nothing to do with the blockchain. It's just simple common sense ways of sharing risk, reward, and data, actually. So we're going to be actioning that during the next 3 months, all being well.
Okay.
Making a start on that. Yeah.
What a creative project, Chris. And I wasn't sure what we were going to be talking about today. And I wish you a lot of success on doing this. And let me know if you open an office on that island. And I'll do some IR for you. So
there's only one flight a week, Dale. There's only one flight a week.
That's okay. I don't move around that much anymore either, Chris. So really much success on this. I encourage people to take a look at the new wave, and you have a creative way of there's probably going to be a whole new universe of investment vehicles coming with this, right? So
Dale, it's a new asset class. It's that big, and in my view, it's the biggest trade of the 21st century coming up. Okay. So I'm hugely optimistic about it, and thanks for your time and giving me the chance to talk about it.
It was interesting. Thanks for sharing your vision with our community today, Chris. Good hunting. You don't trade anymore, but you're still my trading warrior brother for doing an interview with me.
Okay. Cheers. Bye for
Chris
now,
Cook, and everyone, you could follow him at CJens Cook. That's at CJENS Cook on Twitter, and check out the future. As traders, we all live in the future. So thank you, Chris.
More power to your elbow, Dale. Happy trading.
Thank you very much, Chris. Chris Cook, everybody. And you could join the team in 13 minutes on the Morning Edge. Remember, don't just count your windmills, count your blessings. Be back with you tomorrow. Good hunting the rest of the day. And adios. Thanks again, Chris.
Cheers. Bye now.
Cheers.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.